What's up? What's up, everybody? Welcome back to the Real Estate Reserve podcast. If you're tuning in for the first time, welcome. I promise you will be entertained and hopefully you will learn something as well. Might be meaningless stuff, but you will learn something. I'm Jason.
You see how dumb me and Jason are just talking and how we could talk for hours on end all by ourselves.
I'm Jason from Hard Money Bankers. This is Ian from Equity Warehouse. If you are a return viewer, follower, watcher, welcome back. Thanks so much. We certainly appreciate all the support. We have a guest today, very special guest that we're going to bring on here in a second. His name is Curtis May. He's the president of Practical Wealth Solutions and host of a podcast called The Practical Wealth Show. He's a local guy as well in Pennsylvania, not too far from Ian, only about 2 hours north of me. So excited here in a second to bring him on and share some of his experiences.
Yeah, no, it's going to be a good topic. As you guys know, we like bringing in real people doing real stuff, not the gurus. We sort out people who are actually out there, doing business and doing it practically and doing it in the same fashion we will. And we've talked a lot about on the show about creating personal banks, velocity of capital, how to grow your investments, build snowballs. And this topic's going to fall a lot more in line with that than your, nuts and bolts storage or real estate investing type stuff. So it's always good to have a good refresher course on these types of things. So I'm excited to bring Curtis here in a second. Guys, if you get any value out of today's show, please like, share. That's how we continue to get this thing to go. We don't take advertising dollars. We don't do it for any other reason other than we enjoy talking and we enjoy spreading the message of real estate investing. So if you get any value out of it, please share it. Give us a 5-star review, whatever you see fit. And why don't we bring Kurt in?
Sure, absolutely. Kurt, how are you? Welcome to the show.
I am doing fantastic. Thanks for having me.
Yeah, absolutely. Why don't we just start off with a really quick background about yourself and what are you up to these days?
Yeah, so I'm a frustrated basketball player. No, I just say how I got into the space I'm in is I was in college and I realized my junior year the NBA was not looking for 5'11" two guards. I got my insurance license back in 1985 and I did it what I call wrong for the first 15, 20 years. I was like Dave Ramsey on steroids, buy term, invest the difference. And then I read 2 books. I read Becoming Your Own Banker. First I read Rich Dad, Poor Dad. So that's what, as most of y'all, if y'all are doing shows, everybody puts that little purple book somewhere in their path, right? Sure. And just shifting your thinking. And then somewhere after that, I just fell into Nelson Nash's Becoming Your Own Banker, and that started me in a rabbit hole of, I didn't even know what to do with it, of just thinking about the world, reading up on Austrian economics and, really focusing on cash flow. I'm also big into I'm not a certified person, but I teach like profit first type stuff. So, because most wealth is lost by how people manage cash flow. And like, you can't even do we were talking about IBC offline. So you can't even do that if you don't save money because it's a saving strategy. Right. And so if you can't manage cash flow, you can't do all this other stuff. All wealth starts with, you got to pay yourself first and spend less than you make. Okay. And that's the foundation. And so that's where we come from. I do that. I consider myself a financial educator. And, my goal is I teach principles that help our clients become and remain financially free. So that's my short, long story, and I'm sticking to it.
Yeah, well, hopefully the NBA next lifetime's looking for shorter guards, and you got your chance to play.
I know. If I was 6'4", I've been dangerous, right?
Yeah.
So,
hey, man, it's all good, but basketball wasn't in it for me. Way too much running. But anyway, with that being said, you bring up some good points, and we've talked about a lot of these topics on our show because they come about. I feel like real estate investors, we just sometimes we're like, oh, we're making money. And it's like, all these people want you to guard your taxes and all this other stuff. But a lot of that is for people who have like ordinary operating businesses. I guess, could you talk a little bit about like some wealth principles or how it relates? I heard you say, let's start with this. You went down the Dave Ramsey wormhole. You still believe in the Dave Ramsey wormhole, or What's your thoughts on that one?
No, I think that information. So he's got a market, right? So for that group of people, if you're, I just say broke, but if you're like middle income, you're in debt, you're a spendthrift, that's who that market's for, right? And so you're basically I do this example, and when I do presentation, I say, listen, you're here, and his job is to get you to zero. So people are, it's like I call the debt paradigm, right? You either you're taught to, because if you're just focused on getting out of debt, all you've done is work your way to zero, right? You're not ahead. Getting out of debt does not make you wealthy, right? And if you just save, well, saving is just delayed spending. So now every time that even if you're for investors, right? I was just talking to a group of investors yesterday on a call, and it's like this woman, the mother of the clan, paid cash for everything. And I says, okay, well, you finance everything you buy, right? So even when you pay cash, because you're either paying you somebody else's money, or when you pay cash, that just means you financed it, and you're giving up interest you could be earning, because a return on equity is zero, right? So you have a bunch of money not working. So I find that with investors, they're good at the thing, right? So it's skills to money. Make it, keep it, grow it, right? Your listeners are already good at the making it part, right? As real estate as an asset class, making money, but it's not what you earn, is what you keep, right? And I'm more of I always tell people, look, that's your job. See, if they want to make money, I'm gonna send them to you. I'm the defensive coordinator, right? I'm making sure that you don't go broke. I'm making sure that you're efficient with your money. And so I focus on efficiency, and then we walk people through, and I'll go over that next if you want to. I'm gonna take a breath. The principle, I call the 5 principles of personal finance, because this is what people miss. Your financial plan, what do you want and why, precedes the business plan. The business or the investment plan is the engine that generates revenue. But what are you trying to accomplish? And I think a lot of people don't really sit down. They just want to make more money and do more deals. But how do you know if you've won?
Yeah, that's the exact issue. That's the exact issue that all real estate investors, real estate appraisers, brokers, realtors, they all have it. And Ian and I, obviously we don't want to talk down to anybody, but we're like, listen, trust me, the last 10 or 15 years, the real estate market has gone like this. Your income has gone like this. Your spending has gone like this.
Yes.
And October 2022 was a big kind of month for a lot of folks. And, I think maybe the general public maybe didn't see that, but interest rates went up, short-term interest rates went up, mortgage interest rates went up, less deals were available, less inventory in houses. And I don't know what the stat is, but I just know, because I think we all know, that realtors aren't selling as many houses. Title companies aren't doing as much business. Real estate investors aren't flipping as many houses, right? Inflation has driven household good prices up. Mortgages are higher, things like that. You're still living the same darn lifestyle that you lived for the last 10 years that increased. So that's scary. And I don't think we've seen repercussions of that yet. Before we jump into the 5 principles of personal finance, talk a little bit about cash flow mapping. I've never heard that actual term, but I think I know kind of what direction you're going.
Yeah. So this is my version of profit first, right? Except for I start people not on the business side, but on the personal side, right? So I think that you need to know what your life costs. So I do it just for people that, like, the people I work with, guys, generally are I work with real estate investors, that people that like my message, that find me, real estate investors, small business owners, and people that aspire to those 2 things, right? Because their goal is work optional income. So if that's what you want control of your capital, and you want cash flow, and you want to get this thing done in 10 years or less, that's who we work with. So cash flow mapping, what I found as I've, a guy named Carl Lutz created this software that I've kind of incorporated. So I have no original thoughts, guys, but I can take your thing and make it my thing, right? And I criticize it, right? And so in working with people, the number one problem people have is managing cash flow, right? And because wealth begins in the mind, but it ends up in your wallet or in your bank account. And so, we call, like, I don't like budgeting. I'm like the anti-budget guy, because you got to tell your money where to go instead of asking where it went. And right, so when people focus on budgeting, or people focus on, like, if you're in business, your P&L, that's history, right? That's like driving a car looking through the rearview mirror. And so when I was just having this conversation with my daughter literally an hour ago. So listen, I need you to get 4 accounts. I want you to have an account that your income comes in. I want you to create, we call it a wealth capture account, and take 15-20% of your gross income. And off the top, you pay yourself first. I tell people, look, if you can save 20% of your income, I don't care what you do the rest of it. Okay. Yeah. Now, what I do is I want you to have a second account called for your fixed bills, right? So all of because you have certain bills that are what I call static, that are predictable in timing and the amount. And then you have variable bills, gas, eating out, entertainment. So what you do is you set, that could be on a debit card or a credit card if you're disciplined enough to pay it off at the end of the month. But if you just, focus on that and then just move money out of, bigger accounts, what Mike McCallowis calls it smaller plates. Like, so you want to not do what he calls bank balance accounting. Oh, I got a lot of money, therefore I can buy this. You have to take that off the table. And, so it starts there. You got to pay yourself first, spend less than you make, right? Out of the richest man in Babylon. And so I start everybody with that. I don't care how good you think you are. It's not what you earn, is what you keep. So that's what I found, is that's where the game is won and lost. And most people in the financial space find that tedious, and they don't want to be bothered with that. But I've, been doing this over 30 years. That is where the rubber meets the road. And, what I do that's a little bit different is I find money that they're losing unknowingly and unnecessarily. And we use that found money to improve cash flow or live a better life today, right? So it starts with A, take control of your money, and then B, stop giving money away, which we call wealth transfers. And there's 5 of those, right? And so I start this. So if we talk about any other strategy, let's get control of your damn money, okay? And then we can talk about, because the way I teach it, principles drive strategy, right? And then strategy drives tactics. What tactics are just tools of implementation, and most people lead with tactics. They'll hear I had somebody call me that one of my clients said, "Oh, she's done podcasts, and we know about trust. Can you speak on trust?" I says, "Well, it's part of my second principle, which is maximum protection, but I don't do it. That's a specialty, right?" And so people call me, "Well, I want to trust." Well, what kind of trust? How much you make? What do you need? All this noise. They hear like a little segment on IG, and I need a trust. I need a family trust. But what? You don't have any money, or yeah, I get a little bit hype, y'all. So I'm from Philly, right? So I'm an Eagles fan, right? So we get hype.
Go.
And but it's like it's the plan. Investing is a plan, right? What's the plan? That dictates the pieces, if you will. All right, so I'm back now. I'm off. That's a Curtis rant, right? So I'm back.
No, dude, it's all good stuff, because it's all stuff that we talk about all the time. And, you said, I don't have any of my own original ideas. I don't think any of us do, right? Like, I mean, I think even at the top level of professional sports, people look at a play and they're like, yo, let me borrow that, and I'm going to tweak it, and I'm going to apply it to how it fits in my world. And it's the same thing for us. Like, everyone's like, hey, man, like, why do you get so consumed with, I was in the trust wormhole there for a minute, and the life insurance wormhole. I want to learn about it. I want to apply it. Okay, it's another bucket that we all fill up. And that analogy of, you're driving a car looking in the rear view mirror makes sense. You need the rear view mirror to know where you're going forwards. But in the same sense, you can't always be looking forward. Sometimes you need to look backwards. And, we utilize YNAB in our business. We bucket the money. We only bucket money that actually has come through the front door. So, I mean, dude, those are all like really good points, and they're all really good basics, whether you apply it to business or you apply it to your personal life. And the profit first thing, I mean, that was huge. Nick True, he does YNAB and does the profit first theory inside of YNAB. And we applied that to our business, and we're like, holy shit, we can actually pay ourselves instead of money. You take a little bit of money and you dump it in your operating account, it's going to get burned up. The same way you get burned in your operating account at home. Same thing.
So that's funny because I was thinking about, all right, what can I like a software to help people kind of do that?
Yeah.
You know, like I give them a software to track it, but I was like, what tool do I have where they can, well, one, track their expenses, because you got to be able to write, you know, track and keep records of your stuff, but also where you can bucket it. I just only have 4, but I like that. I have to look that. You tell me after the show how to find that. So I'm always stealing good ideas, but because I always think, how can I simplify this? Because I work with real people every day. This is not my day job. You know what I mean? I work with clients, and you know, I'm a second generation business owner. So I, you know, brick and mortar I had you appreciate this. I had 3 bars in North Philly. Okay. So see the gray hair? That's where the gray hair came from. I could get robbed at gunpoint you know, twice a year. And helping my family and then running my insurance business, you know, at the same time. So so in working with small business owners, you know, dealing with the city and L&I and managing cash flow and, you know, all that stuff is, if I had a baptism by fire with that kind of stuff. So I kind of bring that into, and then when I work with, you know, real estate investors, most of them don't run it like a business, right? They don't, you know what I mean? They don't look at their numbers. They don't, they're not like saving money. They're not setting aside money for taxes. They're not, you know, that kind of stuff. So I try to get into the nitty gritty with that because, you know, we talked about before, I do infinite banking. We call it the private reserve strategy, but that's a saving strategy. So it's not a magic money box, right? You have to save money, and then the savings, that's where you store some of it, you know? So, so like at times I'll show it and I'll show, look, here is where it fits in your plan. Like, so that you understand what it does and what it doesn't do, because it's not a magic money box. And, you know, people talk about arbitrage and positive arbitrage, all this BS. That's not how it works. That's not nothing. So, okay, I'm back.
Let's jump into some privatized banking stuff.
Okay.
Because I think that's a topic that is interesting to a lot of folks. I mean, Ian and I are both involved in that on the IBS side. I mean, I also, you know, run a private lending fund. You know, so we lend out privately and have been for the last 16 years locally. So I'm familiar, and I think the term privatized banking is scary for folks. It's like, how can I be the bank? They don't fully get it.
Right.
So maybe kind of let's go down that direction of where you see fit.
Yeah. So I call it privatized banking. You know, my mentor studied with Nelson Nash for 18 years, my direct mentor. And so I've learned it from him and a couple people that are like hardcore, you know, people, you know, so I knew Nelson Nash, so I do it like he says do it. And but I teach it as a saving strategy. So because Nelson has a question, we asked the question, he has a book called Building Your Warehouse to Wealth, and it's where do you store your cash, right? And so banking is not an insurance policy, okay? Banking is just creating because banking is a concept, right? So it's creating a pool of capital that you control that can move at cost to meet some needs you have. So that's the concept of banking, right? So when you look at it, you say, okay, so you can be the bank, like but you have to capitalize. See, if you don't save money, you can't be a bank because you don't have any money. So Adam Smith says before a bank can make a loan, it has to have a deposit first. Right. And so you've got to deposit, and capitalization takes time. You know, back in the day, they used to call it capital formation, you know, so they would save. You have to let your capital form, right? So that you have some money that can be deployed in whatever you feel the best use of it. So if you develop capital, I got a couple clients that are private lenders. So he was like, oh, real estate, but he liked private lending. So he was already doing it. So I created a policy that held, he basically got in like $100,000 in like 3 months. And then, so he had a bonus coming, and then we dumped in the money. He had 2 deals coming back in, and instead of putting it back in his Schwab account, we flowed it into the paid up additions in his whole life policy. And so now what he was able to do, right, is instead of what I call draining the tank and flowing it back out, because see what happens is, yes, you're making money, he's charging, 9, 10, 12%, whatever, but it's out of the other accounts. You're not making money. So with the concept of IBC is access to capital. This is the most important part. Access to capital and uninterrupted compounding, right? And so what happens is he was able to access his capital so he could collateralize the cash value in the insurance. Now so I just said we will put one extra step in there. Let's put it here. So now you can borrow. Now, you're not borrowing your own money. You're borrowing against it. You're borrowing the insurance company's money, and then he flowed it back out, right? So that means his money is still in the policy earning 3, 4, 5%, right? Probably 4, right? The year we did it. And then he's getting our interest charge from the insurance company of 4 or 5, but he's making what? With a private lending deal, 9, 10, 12%. So, right? And so if people don't understand how money works. So if you can't, because people say, well, I'm only earning 4% in the policy. The policy is not where you make money at. That's storage, right? So if you borrow money and you loan it out at 4% and you earn 8%, that's 100% return. Is that right? Yeah, that's 100% because you doubled your money. Right. And so you have to look at how money works. And so now, but your money's still over here making money, earning dividends, is life insurance. And then you still have your money in your deal, whatever that's doing, and you're bringing back cash flow. So, but the key ingredient is money is a product of your mind, your skill set. And so that's where this sort of policy is just storage, but even it is it's a system of money management. So it's not, people say, what company are you using? What's the it's not it is the product. You got to use whole life, not universal life, but it's not the company, it's the coach.
Sure. And here's the key thing that you said that so many people don't get is you got the compound interest, but you also have the uninterrupted compound interest. And my financial recommendation for anybody is just go on your freaking iPhone and get a compound interest calculator and just go to sleep with that thing and run scenarios, because it's ridiculous. It just, it's ridiculous, right? You use the rule of 72, right? You take your interest rate, you return. So let's say you're a private lender like myself, and I try to achieve about a 14.5% interest rate. Divide that by 72. That means every dollar I put in, I double in 5 years, right? Do the math. So, if someone's got whatever, $10,000 right now to start with, not a substantial amount of money. And guess what? You double $10,000 and you got 20, then you got 40, then you got 80, then you got 160, right? It takes a while to do that.
Right.
But, if I have $1 million or Ian has $10,000 or reverse, whatever, Ian has $1 million, I have $10,000. Neither of us are doing any work, and we're doubling that. If it's in a passive investment, obviously.
See, that's the point. See, because what you have to do is, one of the things I'm big on is I separate investing from savings. Okay, because savings, let me define savings: safe, liquid, accessible, guaranteed. Okay, and so you start with saving, right? You save from income, and then you can use your savings or your capital to buy or build cash flowing assets, because what's going to create wealth for you is velocity. See, that's another form of velocity, because what happens is when you look at investing, which means to cover fully, right? So investing is not about buying something, it's about becoming something, right? And so what happens is, but you want to most people are focused on investing for capital gains. They're just trying to buy low, sell high. But if you want to become financially independent, you're investing for cash flow. You want both, obviously, but you want to, it's a mixture of that, because, I want to go to the beach and stay at the beach and still have my money coming in, right? So you got to decide what you want to be when you grow up. And then there's things that you do that I introduce on our show, because what we teach is just 4 asset classes, right? Business, real estate, paper, right? Paper, private lending, tax liens, life settlements, trading, which I'm not in love with the stock market anymore. But all that's just an asset class called paper and commodities, oil and gas, gold and silver, agriculture. And so you kind of got to decide what you want to be when you grow up, because all I want to do is have you save money, help you capitalize, and then you learn about what you want to know. And I just want to make sure that you have the capital to do what you want to do, whether it be private lending, whether it be, oh, Curtis, I heard about these I got clients that do ATM machines and, all kinds of stuff, so it doesn't, I'm not, because remember, investing is about becoming. I'm not here to tell you what to become or who you should become. I just want to make sure that A, you're saving money, that you've played defense, you're protected in case of you live too long, die too soon, get sick, get sued, have a fire. That's what we call maximum protection. That's our second principle. Legacy, liquidity, and velocity. Those are kind of the principles, right? And so velocity is what you do with them, right? And but a lot of times I feel like people are building a house on sand, because your plan should work no matter what. Up markets, down markets, shit happens, right? And so it's not about, nobody, last time I checked, has a working crystal ball. Okay. And so what you want to do is provision. There's always contingencies, and you've got to have a plan that works. Most of it's like you have certain fundamentals that you put on automatic pilot, and then you capitalize and you look for stuff that you like, that you understand, that makes money. But you've got to have the foundation of what happens if you fall off a ladder, you get hurt. Have you protected your income? What happens if you die? What happens if, so I had a client and we were going through her, I do this thing, this one-page financial plan called principle-based planning. So I can see all their stuff on one page. It's okay, you got $3 million worth of real estate. You've got $120,000 of passive income. She had like 5 entities, like 4 or 5 LLCs. I was like, okay, where's your umbrella coverage? Well, I got LLCs. Well, it's limited liability company. So your first line defense is not your entity. Okay. It's insurance. Like, you need an umbrella policy, and I just introduced her to somebody that, gave her $2 million of umbrella coverage for like $800 a year. You know what I mean? It's like little stuff, but they're gaps, because, people have specialties, but nobody is like holistic, focusing on, okay, you got cracks in the foundation here, and I want to make sure that, nothing can sneak up on you because you've got all your bases covered. So and I ain't do it all. I'm the quarterback, right? I see everything, and then I'm going to give you to a specialist to make sure that you've got a plan where you're good. Live, die, get sick, get sued. You're going to go. You're protecting the ground that you gained, and then you're focused on moving forward. I've had 3 rants today, so slow me down.
No, I mean, it's a lot.
I like rants.
Yeah, no, they're good, because you really see how passionate you are about it. And most people, it's like, oh, I'm going to dabble in this space, and I'm going to fuck with this, and I'm going to maybe try this, and then they don't go all in, right? Like, and that's how Jason and I both individually became successful, is that we're all in on our one asset class. Jason's in the paper game, we're in the hard asset game.
Yeah.
And that's how we become successful and have grown our businesses, by going all in and having rants all the time. And that's how this show got started, was because Jason and I would literally just rant to each other. We're like, God damn, that was fucking good. Let's put this on. Let's put it on a podcast.
Somebody recording this. This is brilliant, right? And that's what I should do, right? That's funny.
Yeah, exactly. So, but I mean, dude, it's all good stuff. Asset protection, all these different things, and to have someone oversee and actually understand, and having a coach, as you like. It's not even a good terminology for it, but having the GM overseeing it all, and making sure that, all right, this coordinator is doing that, and this player is doing this. It's easy to lose sight of it. I mean, Jason, Christ, how many loans you got on the books, right? And I'm sure you look at your reports all the time, but you have multiple controllers, you have multiple sales guys that are always watching the books. The same thing with us, that allow us to continue to look and say, okay, this is happening, great. Everything's working in unison. So
yeah,
they're all really good points, man. By the way, I know somewhere in that rant was something about a North Philly bar. You're a better man than me, dude. Better.
Listen, that's what I'll tell you. That wasn't by choice. It's just it was my dad's thing, and he got hurt, and It's like the Godfather 3. Just when you think you're out, they keep pulling me back in, right? So I was out.
Well, and here's the thing: most real estate investors as well, they're great at real estate investing, but that doesn't mean that they're great at the rest of this stuff. And like you said, the terms fill in the gaps. You need someone to fill the gaps. I mean, I've had some ultra successful, pretty ultra high worth people ask me questions about something that I thought was easy, right? It was common sense. And I was like, I should be asking you that question. And they're, and they don't know because, they're all focused and that's not the fault. Obviously you can't know everything. You don't need to know everything. You're gonna be more successful sticking to
that's that book
to your plan.
From Ben Hardy, Who Not How. So you need to know the who, like I'm the who for certain aspects. Sure. And then so I try to introduce people to the different who's of where I guess my gift is that I see the big picture. Like when I first saw Read Rich Dad Poor Dad, at the end of the Matrix when Neo could see the Matrix and little squiggly lines. That's how I was with financial statements. I was like, I get it. I'm the one. Like I hate accounting before that, but all of a sudden, so I could talk to you for 5 minutes and draw you out on a yellow pad the cash flow pattern of your money, right? And how to fix it, or what's missing or what that kind of stuff. And it's that clear. And I didn't think it was a big deal till recently. And then when I would just, I would draw something out and they're looking like I gave them manna from heaven. I said, okay, I guess this must be a big deal. So I'm going all in on the cash flow mapping part because I see a niche there. Because even before you do infinite banking, listen, if you make $100,000 a year and Curtis wants you to save 15,000 or more at least a year, and you can't do that, and you're saying, well, I want to do infinite, but you can't do infinite banking. You don't have any money. You're not saving money. That's where the money comes from to pay the premiums. Your savings. It's a saving strategy.
Exactly. Unless
you have money, then we can, you can do lump sums also. Just throwing that in there for y'all. Some people with some money. Here he is.
I want to rewind so you can repeat this one more time because I think this is really beneficial for a lot of folks, even if they have a lot of money, because I think just people aren't disciplined, right? And real estate investors get big hits typically, right? They'll be scraping by. It's like, boom, just got 50 grand on a flip, right? And then it's like, cool, now what? And consistency is important. So talk about those bank accounts one more time.
Okay.
Bank accounts. And, let's just say just because most of our audience is real estate investors, and a lot of them do have cash flow from rental properties, but they also get big hits through sales. Right. So something that's most relevant to them.
I wish I could draw this out, but so what happens is I separate it out. So when you got to separate church and state, right? So you've got a business, a real estate business. So like the rents that come in, that's your cash flow. So that, and then you've got your household. So what I do is like every time I get a check from the business, I have 4 accounts. I have my income account. This is right out of Profit First. I just tweaked it a little bit. And then I have my wealth capture, or what he would call profit. I set aside. Now I still work with business owners, but a tax account. You may owe some taxes. Hopefully y'all don't, right? Well, if you're flipping and wholesaling, you will, right? Because that's transactional business, right? Even with the private lending, that's still interest income, right? So you got to set aside money for taxes. Yep. So that's an account. So you got to figure out your allocations. Like I'll do 15, 20%. I'm paying the house. I get paid first. I'm doing all this damn work, right? So you got profit is reward you for taking the risk of owning a business. Then I have a tax account. Then I have, if you draw another box, then I would have owner's pay. So mine is like 35%, and I actually run payroll because I have an S corp, right? And I run payroll, and then I just did this morning because every time I get a commission check, I was like, okay, look, I get the number, and I just draw out my journal, and then I go to the bank account and I just move the stuff, and then I have my OpEx account, right? And so I try to run that on 35%. Now that's because I don't have as much overhead. So y'all, you got to play with your numbers, and that's kind of what I help coach people on how to do. And then out of the operations, out of the owner's pay, then I have a second set where you have income coming in, and then I have savings, I have variable bills, your personal stuff, right? Because you got to figure out what your life costs because there's something called Parkinson's law, right? Which says that expenses rise and meet income, which y'all alluded to before. So if you make more, you're going to spend more. So one of the things that we encourage our clients to do is to create a lifestyle ceiling, right? I noticed that for me this summer. I've got all this overhead. I say, oh, wait, because you spend it, something comes up, we want this. And I was like, wait. No, I'm not. The goal is to become financially free, right? Which is to use money to buy or build assets. So we call it in our system getting to a position of FU. Okay. So, right. This is why in my membership program, I have a clip of The Gambler with John Goodman on it. And you want to get to the glorious position of FU, and which is passive income twice your expenses, right? So I try to gear all our people on is what you're doing getting you to FU, but it starts with telling your money where to go instead of asking where it went. And then the money you put into the wealth capture account, that after you have about 90 days of money for emergencies, everything else above that is your opportunity fund. And then now you have capital to look for deals. Like you have to train your brain to think about, because see, we've been trained to get our money away to Wall Street and lock it up for 30 years and not think. I teach people, listen, if you don't want to think, because it's your money, ain't my money, don't call me, because I ain't that guy. Call your cousin in Primerica or something, and but I want people to be in control. So I really preach, being a sovereign individual, being in control of your money. But it starts with, all right, when money comes in, I've got to assign each dollar a task, right? And so it's I think I got it on one of the things I have on my website. I have a link to something called Budgeting Stinks, where you get a free ebook, and we kind of go through this process, because that's to me where the rubber meets the road. And I don't care if you're making $50,000 a year or 500. Okay, that's the game is the cash flow management, and then it's the other thing. Let me just add this to something my mind is on it. Is wealth transfers. Those are the first thing I start with, not with investing, right? So wealth transfer, most people are transferring money unknowingly and unnecessarily. It's costing them like $2 to $5 million over their lifetime. But see, what they don't teach in personal finance is, I've heard the term opportunity cost.
Yes.
Right?
Oh, yeah.
That's a real thing. See, people don't count that in their money. Because when I say you finance everything you buy, so I this woman, she put $100,000 in the house. Well, equity has no rate of return. So if you go back and you understand the rule of 72, then that $100,000, or if you spent that, a guy spend cash for $100,000 Tesla, it's like, are you out of your effing mind? And because if just do 6%, that means your money's doubling every 12 years, right? So in 12 years, that 100 is growing to 2, and then the 2 is going to 4. Well, that's still happening. It's just not happening for you because you transferred it.
That's right.
To somebody else's asset column. Like you have to identify, eliminate, or at least reduce them. So the 5 areas where people screw up are how they pay their mortgage, sending extra payments, 15-year mortgages, I'll step on each toes, is a complete waste of money. Okay. In this monetary environment, where the Fed is destroying the debt, you don't need to hurry to a whooping, right? As my mentor would say, right? You just let inflation destroy debt for you, because the one of the defining moments of money is your money will never be worth more than it is today, right? Well, the banks know that, so you need to pay them back slowly and put your money back to work. Right. And then so we talk about mortgages, taxes. You need a good tax strategist, like a difference between a tax preparer and a tax strategist. So I'm actually going through a program right now because I can't find one. So I was like, all right, I better become one. Right. Don't call me about it yet. Give me about 6 months if y'all hear this. And maybe 3. I'm a quick study. And taxes, how people fund their qualified plans, like anything over the match is a waste of money. I could argue maybe even putting it in there is a waste of money. Depends if y'all still W-2'd, right? And you're listening to this show, you want to be an investor, you need that money liquid so you can deploy it in private lending, in real estate, or things that you understand that you can control, where you could get 12, 14%. You can't say, well, look, I'm just going to hope some fund manager is really smart. Okay, I'm a dollar cost average into whatever. How how people fund educational plans, 529 plans and such, that there's problems with that. And then how people bank, how you pay for what we call major capital purchases. Anything that you can't pay for in full within your cash flow is a major capital purchase. So there's more money lost in those 6 things I mentioned, cash flow and the other 5, than you'll ever make trying to pick winning investments. So it's like filling a bucket up, but you got holes in the bottom, right? And so we're chasing returns, trying to turn up the faucet, but it's coming right back through the bottom because you haven't plugged the holes, right? So I'm the hole plugger guy. That's one of my business. I'm trying to plug the leaks in your personal economy. So I hope that was, I talked fast, but I hope that made sense.
It makes sense, especially for those of you that still have jobs. Curtis, you don't know, but I was a fireman for the city of Baltimore for 15 years, and I didn't put any money away in deferred comp. That was our savings plan. I put, $50 just to have an option because I didn't know if I was going to be a success or a failure. So whatever, let's just throw $50 a pay in there, $100 a pay, play that game. But I took all my additional cash flow and invested it into properties. Then once we started taking draws from the business, then I was like, well, now I got extra cash. Let's go max that out. That's an option for me to max out because I can get a tax benefit for what we were doing at that point. So yes, knowing those things and taking the time and understanding it. Most of the stuff that's set up is traditional matters, and that traditional shit is meant to extract your wealth from you and give it to the other man. I'm not going to go down my conspiracy theories and everything else, but I'm in full agreement with you.
The right guy. All right, that's that. But even with the tax deferred, because they say, well, I'm saving money in taxes, right? You're not saving money in taxes. You're deferring taxes. But here's the more accurate word. You're postponing taxes. Okay. And so you've got to ask yourself, I'm not telling you what to do. I'm just saying, do you think in the future, will the government need more money or less? Right. And so now, do you want, this is what regular people do, the Ramsey types and that kind of thing, is they have the majority of their capital in an asset that they can't touch for 30 years, that the tax are deferred, and then you withdraw it. So if you make, here's a fun fact. So if you make $100,000 a year, your effective tax rate is like 8.8%. So if you put in $10,000, you're saving like $800 a year, right? So on the taxes, so it's not a tax savings thing, but you could, let's say you do well and you got $1 million in there. Well, okay, but now you don't know what it costs to get it out now. And then you might pay 20, 30, 40% on the back end to pull it out. And see, so nobody teaches that. Accountants don't teach that. They just are they're thinking short term. How can I lower your tax bill today? Whereas how can you lower your tax bill over your lifetime? See, this is a lot of things where the investors and stuff, I was on this Clubhouse show. So you talk about, I'm kind of hype, right? So this guy was not disagreeing with me. They actually come on and talk about infinite banking. And so I talked to my guy from Edward Jones. I said, I'm sure he's a great guy. And he says, well, I should fund all this other deferred stuff. And then maybe you could put money in a whole life policy, which I said, with all due respect, your friend doesn't know what the hell he's talking about. And this was like a big guy, in the space. And that was on another share talking, I put 40 grand in a SEP and this and that. And I'm listening. I don't think I said this time. My head was about this post. Says, y'all are incredibly stupid, right? Why would you, and you say you're real estate investors. The whole idea is to borrow money and use the tax advantages of the real estate. Robert Kiyosaki says you don't pay any damn taxes. So you're missing a big thing, because you don't have a strategist. So I'm not, my wife always tells me to stay in your lane, but you read tax-free wealth and, the 8 investments the government pay to make. Because I was at dinner with Tom Wheelwright, for example, at a conference. He goes, this is around the Trump thing, right? He goes, he said, look, if Trump is paying, this is like 2016, if Trump is paying any tax at all, he needs to fire his accountant.
Right. Yeah, I don't think that man's paying any taxes. And
right. But he's just following the law. See, so people get upset about that. The question you should be asking, I posed this, so, I have a pretty good African-American following, right? And I'm like, so y'all are mad. You're thinking Jeff Bezos, they're doing something wrong. I said, listen, don't hate the player, hate the game. All right. And I says, but you need to learn the damn game because all they're doing is follow the law. The question is, how can I do that? Right? What's the difference between his plane and your pickup truck with I buy houses on the side? Or your pink Cadillac from Mary Kay? It's the same thing. You just don't understand the game. Well, so anyway, okay, that's another rant, but that's a
no. I really like that rant because the game's really fucking hard, straight up, dude. And everyone starts a business and they're like, it's time to start a business, and I go do it. And Jason took the paper route, I took the hard asset route, but we were flipping houses, dude. I wrote a fucking tax bill the same amount as my fire department annual salary, and I fucking cried. I couldn't do it. And we had a monumental shift and said, we're buying rental properties, and I'm going on the Uncle Donald tax payment plan.
Yes.
My goal is to never pay taxes again and 1031 until we die. And I understand that we have investors and it might not happen on some of our properties, but my goal is to have so much accumulated depreciation, cost segregation studies, and whatever else there is. I plan on hopefully never paying the government again. It's just, that's how I mentally live. But again, they make that game so hard. They don't teach this stuff in school. They don't teach it in school for a reason. And there's a reason that, you got to go out and learn. Jason tells a good story. You got to go out and learn by real world operations. I mean, his dad was an accountant by trade and he took accounting, and he didn't understand accounting until he started doing it in his business. So, I mean, it's what you got to do.
To me, it's like you start playing with real money. It's like, wait, what?
Yeah, it's your money. It's not. Yeah, it's not.
That's what you got to understand. It's your money. So there are bureaucrats that think it's their money, and we're going to give you the right to it. And what I try to do is, no, it's your money. You need to control. That's why I like putting in policies, right? Because Nelson Nash used to say, "Where would you like to store your money? In a joint account with the Treasury Department, or a free contract with other free people, life insurance that predates the IRS by 150 years."
Yeah.
Guided by contract law. See, people don't know their history. They don't understand economics. And so we try to teach people to think from a macroeconomic, reading like economics in one lesson. And it's a huge book. I'm trying to break it down, Thomas Sowell, but you got to understand why things work. So anyway, that's the nerdy part of me. So
dude, this is all great stuff, and we could take this and talk for days on some of this stuff because we're all want to nerd out on this.
To the choir, right?
Let's end with one question that we ask everybody, and I'm going to be very interested to hear your response because we've already talked about lots of podcasts, books, mentors, and things like that. But what's a current book or podcast that you're very you want to share with everybody that you like or you're intrigued about? And I know we already discussed lots of them on this, but what's one that maybe someone hasn't read?
I'll give you two.
Out. Okay,
I'll give you two. So there's I'll give you two books. One is, and I was at a conference with Russell Brunson in Mexico earlier this year, and he was there, Benjamin Hardy. 10x is easier than 2x. I'm on my third reading, of that, because it's fascinating because you think you have to work harder, right? Because they're thinking about the Grant Cardone version, and Dan Sullivan says you've got to work less. So it's 20% of what you do, and so there's 80%. So you got to let go of your bottom 80% and focus on the top 20. And so because my marketing is working, so my calendar is full. It's like, dude, you can't grow. Where are you going to work harder? You've got to change who maybe you're talking to. You need to create space in your schedule so you can think. So I've hired an operations person. I've got, I'm trying to do stuff to free up time and think. So that's a great book on thinking about that.
It's called 10x is easier than 2x.
10x is easier than 2x by Dr. Benjamin Hardy and Dan Sullivan.
Yep.
And another great book is I don't know if y'all heard of Myron Golden. He's got a book called I was at not Funnel. Well,
I was in Russell's original mastermind with Myron.
Oh, okay.
But this is PreClick Funnels too. And he was an OG from that group. I mean, there was only 20 of us back in the day when it started. I mean,
and he started that. He was not like Myron Golden. Like he was still coming out of
do you know what his first product was that he came in with? that he was trying to sell? You'll never guess. Nobody will guess. It was like a golf training aid.
Oh, really? Oh, I didn't know that. That's funny. I was in Tampa this year at Make More Offers Live.
Sure.
And but what I was going to say, that what's the book now? It's called hold it. I just left. It's called it's called Boss Moves. And those both of those books are life-changing. The offers, the 4 offers, and he's just condensed this stuff into a book. And he'll expand on it, but it was like totally life-changing for me. And I'm with Russell, all his stuff, and then Dan what's Dan Sullivan's book? Dan Kennedy's book, The Renegade.
Yeah.
The whole Renegade thing. So
the whole.
If Myron's book is as good as he speaks, it's probably pretty damn powerful.
Oh, this book is
that
awesome.
Man can speak.
Yeah. And he breaks it down. I'm a big follower of that, and I just got a check yesterday for like $157 off affiliate income. Yeah. So, and because I'll send out his stuff, and I'll put I must have a good 10, 12 people must have bought the book, because that was the only affiliate link I put. So I'm a low-level partner, and I'm probably going to join his thing, before the end of the year, so I can take that deduction. But you have to your number one. When I talk about investing, your number one asset is you, right? And so, and I know y'all both have gone down this path, and so you got to invest in your mindset, your skill set, because what you're doing, you had to learn how to do it. You have to learn the skills and your network, who you know and who knows you, and so that's kind of the premise when you break down, success leaves clues, Brian Tracy would say, or Tony Robbins, I don't know who said it first. And so what I like to do is have our clients look, when I interview people for our show, who's doing what, but I want to get into what's their thought process, what's their philosophy, even if they're doing like syndications, what can you take about how they think about underwriting and do it if you have 4 duplexes, right? Well, how are they thinking about stuff that you can do? So that's kind of what you got to break down, and just be curious. And then, don't just listen. You got to, journal and think about it. And Nelson Nash said you got to rumigate on it a little bit, right? Yeah. And that kind of thing. So that's I hope that. If you have another question, this
has been awesome. Those are two books that we're gonna have to add. I know I have not read either of them. Where's the best place people can find you, hear your show, learn more about what you do, how you do it, on the internet or anywhere? Where can they find you?
So I would send them to our site, practicalwealth.net. If you listen to Russell, my funnel hub, right? And but there you can go and you can get to the podcast, which is a link to the podcast, the Practical Wealth Show, our YouTube channel, which is, you can hear more about the, what I call the madness that is Curtis, right? And follow along with the audio video, and IG, and you can go to Linktree. But also from there, if you want, I give out I have a gift. I got to get it ready for when we get off. I'll send it to you. But a show where they can get an interview. We have a book called IBC in Real Estate. Not a report, more like a report. IBC in Real Estate, and I'll send you the links to as a free gift for your listeners. If you want to text, text Be the Bank to 55444. We'll send you our report, the value of liquidity. If you know. And and you can go to the website if I've said anything, this is crazy guy. Who is this guy? You look it up. You want to call me, then our links to, we offer a complimentary consultation for 15-20 minutes. We talk about whatever you want to talk about and see if we're a good fit to be a service to you.
Hell yeah. No, it sounds all good. I'm just looking at your podcast, but cranking out
if you want to send the best way for them to contact you in order to get the IBS for real estate, I think that's very valuable to a lot of folks in our group. And when we can post that in the show notes and the things.
I'm trying to get my assistant to. I email her, send me this link. I just, I was like, and I just can't find it right now, but I'll get it to you when we start recording.
Okay. Yep. No, that's perfect. Yeah. No, we certainly appreciate it. I mean, I feel like we're only talking for a few minutes. We've been going on a full hour,
Right.
Because if this is a fun and passionate topic for Ian and myself, and it's obviously beyond that for you as well. So, again, we certainly appreciate this, and yeah, let's keep in touch.
Definitely.
Take care.
Sounds good, guys.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.